IMF reports that the global current account imbalances hit decade high in 2024. The United Kingdom June borrowing totals 20.7 billion English pounds. And Sweden to host trade negotiations between the United States and China next week. Welcome to the Economic Bulletin. We start off with global economy as the International Monetary Fund has reported that global current account balances widened by 0.6 percentage points of world gross domestic product in 2024, marking the largest increase in a decade. It also reversed the long-term narrowing trend since 2008-2009 financial crisis. In an annual external sector report, the IMF noted that external surpluses or deficits were not necessarily a problem, but could cause risks if they become excessive. It also added that prolonged domestic imbalances, continued fiscal policy uncertainty, and escalating trade tensions could deteriorate global risk sentiment and alleviate financial stress, hurting both debtor and creditor nature. Moving on to Europe, where official data has reported that Britain borrowed more than expected in June, with public sector net borrowing totaling 20.7 billion English pounds in June. This figure surpassed both economists' forecasts and the government's own budget watchdog, marking the second highest June borrowing on record. The elevated borrowing was primarily driven by a jump in inflation, which increased the government's debt interest payments to 16.4 billion English pounds in June, the third highest since records began. Economists are now suggesting that Reeves may need to raise taxes by around 20 billion English pounds to balance the books. Bank of England Governor Andrew Bailey has disagreed with Finance Minister Rachel Reeves' characterization of regulation as a boot on the neck of businesses defending the banking sector rules overseen by the BOE. He noted that the central bank was open to marketing changes to the details of post-financial crisis financial regulation to help the government's economic growth push. Bailey added that a raise in British government borrowing costs, especially for long-dated bonds, was not out of line with increases in other countries. And for further analysis, we're joined from London by CEO of QW Capital, Gianluca Lobafello. Welcome to Q News, sir, and it's a pleasure to have you with us in our economic bulletin. Sir, what are the economic implications of recent UK borrowing figures in the context of slower growth in 2 consecutive months of economic contraction?
Yeah, good evening, everybody. It's actually quite an unexpected figure in a sense that, as you pointed in your report, this has been the second biggest since record started. You are talking about 1993. So 20.7 billion in June is quite scary, considering that there is not a lot of head move, space for maneuver for Reeves, because as you can see, we have now inflation that is basically in excess of 3.5. or let's say close to 3.5 if we look at the big number in the headline. But if we look at the core one, so without the volatile item of food and energy, we are reaching 3.7%. So the central bank cannot really have a lot of space to cut rate. On the other side, we have the GDP growth is tilting on the downside. So we are heading towards a kind of stagflation in the UK. Bear in mind that obviously now Reeve, the only leverage he has is eventually to increase tax. So we expect in the October budget more tax increase above all for the higher earner, but that's actually got, some drawdown. So it's not as obvious as it can be seen.
Sir, what are the risks and opportunities for the United Kingdom economy given the Bank of England's balance between maintaining financial stability and responding to calls for regular easing, sir?
Yeah, in theory, we had to put the situation or the current situation of the UK in a kind of bigger historical context. I mean, we can blame this government and specifically the Chancellor Reeve to take eventually not the best solution ever, but or best decision, but actually the situation she inherited is quite struggling, is quite difficult. So in reality, we had to look more in the perspective of what not just the previous government, but I would say since the late 90s. So we're talking about the previous Labour government, so under Blair leadership, the UK government, the Tories government in the mid 2010, and now we are seeing that actually after, as you may remember, 1976, when the UK needed the IMF bailout, and then they repaid these bailout loans to the IMF in 1979, they had an incredible bullish period that correspond to lower interest rates. So we had interest rate that went downward for 39 years. So from 1982 to 2021. And we have seen the UK experiencing an incredible growth in GDP from being needed and help from the IMF. It went to be a G4 country. But then we was enough to see 6 months of increasing expectation on interest rate at global level, so from the end of 2021 to mid 2022, to see then what happened in 2023 with the famous crisis in the fall under Liz Truss government. That was just a symptom of an unsustainable financial public status of the UK economy.
Sir, how do recent fiscal decisions, including increased employer national insurance and capital requirement changes, interact with monetary policy to influence the United Kingdom's prospects for economic recovery and inflation control, sir?
That's actually a very key point, because all these decisions to eventually increase tax rate, to increase the national insurance, it all makes sense from a deficit, from a budget analysis. So I can see in Reeve's shoes that is one of the most logical decision and obvious decision to be taken. And if you look as well at what the recommendation of the OBR, so the Office of Budget Responsibility, they are inclined to agree with Reeves. The only problem is that what implication we're going to have for the GDP growth expectation. Don't forget that there's been a three set of very bad events that hit the UK. One was own making, so the Brexit decision. The other one obviously is nothing to do with them. It hit all of us, so during the pandemic in 2020. And then all this decision on letting basically all the wealthy part of the citizen to actually not being offered any longer the convenience condition, and so they all basically, most of them left to other countries. So we are seeing three sets of decisions that can be interacting with each other, and unfortunately, in a moment of deficit for the UK, GDP growth that is not as good as was expected, and clearly a more biggest interest expense because interest rate cannot be cut by Bank of England, can be a very dangerous mix for the UK economy.
How might the proposed retreat stance defended by Governor Andrew Bailey impact the United Kingdom's financial sector stability and support economic growth, sir?
Andrew Bailey has been an incredible officer. He was at FCA, the financial market regulator, before joining Bank of England. So I would say he doesn't have a lot of space for maneuver. He will not have a positive term, but it's essential that what changes, because it's fundamental for the credibility of the UK economy. So there is no much space for the Bank of England and for Bailey himself.
Sir, do you see a way that the Bank of England or the economic status of the United Kingdom is going to be better or is going to be out of this big problem?
I mean, there will none on the short term. We are seeing a slowdown. So, there is a cyclicality in the economic growth and boom and bust. So we are definitely seeing a moment of slowdown, a difficult moment for the UK. I think one of the merit of this government is to try to reestablish all the ties with the European Union. I'm not saying rejoin European Union, but definitely having a much more effective and efficient relationship with Europe. That would be a one big plus. But
do you think adding to the European Union or getting with the European Union would be a good idea?
Yes, bear in mind, I'm not saying rejoining because if there is
I
something.
understand you're not saying you're not joining.
But
You
absolutely, yes. They imagine that when they did the trade agreement with Australia, that it was supposed to partially replace the relationship they have with the biggest counterpart, that is Europe. The Australian agreement was representing 0.08% on the UK budget or UK GDP. So definitely is needed a strong and more effective relationship that brings the clock back to where Brexit. So they need to have a very effective relationship, European economic relationship with European Union. Absolutely.
And it's worth to mention to her that the United Kingdom is used to be one of the strongest economies all over the world and globally. From London,
Yes.
that was CEO of QW Capital, Gianluca Lobafello. Thank you very much for joining us in Q News channel, sir, and it's a pleasure to have you with us, and thank you for your insights. Back to our news into Asia, where the Ministry of Commerce has reported that China's wholesale and retail trades grew by 5.9% year-on-year in the first half of 2025, reaching 6.8 trillion yuan. This figure accounts for 10.3% of the nation's gross domestic product. Retail sales increased 5.1% during the same period, indicating robust domestic demand. Key drivers included strong growth in industrial consumer goods, convenience stores, rural e-commerce, and successful trade-in programs for household appliances and digital products. Stay with us as we head to the White House, where U.S. President Donald Trump is meeting with Philippine President Ferdinand Marcos in the Oval Office during the visit to Washington.
A $3 bill. Hillary Clinton and her group, the Democrats, spent $12 million to Christopher Steele to write up a report that was a total fake report. Took 2 years to figure that out, but it came out that it was a total fake report. It was made up fiction. And they used that. Now, the one thing they weren't able to do was to, and probably the only thing I respect about the press in years is the press refused to write it before the election. They refused to put it in. The Steele report was a disaster. All lies, all fabrication, all admitted, an admitted fraud. She paid $12 million, and the Democrats, for that report to a wise guy named Christopher Steele. He wrote a phony report, and they wanted to get that report in before the election. And I'll tell you what, I talk about all the time, the fake news, how bad it is, but in this case, they wouldn't do it. They saw it, they read it, and they said, we don't believe it. And it was only after, substantially, like a month and a half after the election, that it got printed, and it was a big wisp. It was just like a bang of nothing, because the election had ended. If that report had gotten published by the New York Times or somebody, and I respect the Times for maybe only this, because they're crooked as you can be. They're a terrible paper, a crooked, corrupt paper. But for this one moment, they said, this is bullshit, we can't put this in. And neither could any other paper. Wall Street Journal's a lousy paper, very, very dishonest paper. As you see, I'm suing them for a lot of money because they do things very badly. It's got a nice name, but it's really, in my opinion, it's a terrible paper, and it can be corrupt. But just so you know, they didn't take the Steele report. It was the dossier. Remember the famous dossier? I called it the fake news dossier. The News wouldn't publish it. And I'm amazed. They had 2.5 months. It was finished, 2.5 months. That was supposed to be what was going to happen. And it got published a couple of months after the election, and frankly, nobody cared too much about it. But that was a big thing. No, we caught Hillary Clinton, we caught Barack Hussein Obama. They're the ones, and then you have many, many people under them. Susan Rice, they're all there. The names are all there. And I guess they figured they're going to put this in classified information, and nobody will ever see it again, but it doesn't work that way. And it's the most unbelievable thing I think I've ever read. So you ought to take a look at that and stop talking about nonsense, because this is big stuff. Never has a thing like this happened in the history of our country. It morphed into the 2020 race, and the 2020 race was rigged, and it was a rigged election. And because it was rigged, we have millions of people in our country. We had inflation. We solved the inflation problem. But millions and millions of people came into our country because of that. And people that shouldn't have been, people from gangs and from jails and from mental institutions, people that we don't want in our country, and people that we're getting out, dangerous people. 11,888 murderers, many of them, 50%, more than 50%, murdered more than one person. I hate to say this with such a distinguished guest, but you know, they asked me a question. I got to answer the question. No, Barack Hussein Obama is the ringleader. Hillary Clinton was right there with him, and so was Sleepy Joe Biden, and so were the rest of them. Comey, Clapper, the whole group. And they tried to rig an election, and they got caught. And then they did rig the election in 2020. And then because I knew I won that election by a lot, I did it a third time, and I won in a landslide. Every swing state won the popular vote. But I won that all the same way in 2020. And look at the damage that was caused.
How crucial is the ammunition hub that the U.S. plans to build in Subic and the Luzon corridor, considering that these will be built in areas that hosts strategic ports as well as military air bases?
You're talking ammunition?
Yes, the U.S. House Congressional Committee on Appropriations approved a budget.
Well, it's very important. Otherwise, we wouldn't have approved it.
Sorry?
Yeah, it's very important. Otherwise, we wouldn't. We need ammunition. We're going to end up in a few months, we'll have more ammunition than any country has ever had. We're going to have more missiles than any country has ever had. We're going to have all the speedy missiles. We'll have the speedy ones, the slow ones, the accurate ones, the ones that are slightly less accurate. We have everything. But we will have more ammunition than any country has ever had. It's very important to me. Okay. Go ahead, please, Red.
Sir, when you say that you're close to making a trade deal, what gaps remain? And for President Marcos, sir, I was just wondering, do you not think that perhaps the Philippines hosting U.S. missile systems could be considered escalatory by China, especially because they can strike defensively by China? Thank you.
Well, it's an honor to be with this gentleman. You know, I've known him, and I've known his family, actually, but I've known him. And I assume you're from the Philippines? Are you from the Philippines?
Yes, sir.
That's good. You're very lucky to be from the Philippines, right? It's a great place. But we're going to have a very good relationship. I mean, I know you had some problems with another president, and it was not your fault. It was the president's fault. And the country was maybe tilting toward China, but we untilted it very, very quickly. But you know, you had a country that was tilting toward China for a period of time, and I just don't think that would have been good for you. You can deal with China, you should deal with China, but when I got elected, everything changed, and they came right back to us. Say it again? Yeah, Brian, go ahead.
Oh, Mr. President, I just wanted to piggyback off the
Sorry, I
housing.
have a question to President Marcos.
Yes. Sorry, what was the question again?
It was about whether having U.S. missiles hosted in the Philippines could be considered escalatory by China.
All of the what we consider part of the modernization of the Philippine military is really as a response to the circumstances that surround the situation around the South China Sea, and now what we used to refer to as Asia Pacific, which we have expanded now to the Indo-Pacific. And if we would certainly, like in any kind of military spending, we would wish that it wasn't necessary, but it is. And so that is what we are doing. And as an adjunct to the question about the ammunition production, this is actually the United States is assisting the Philippines in what we call our self-reliance defense program, which is to allow us to be self-reliant and to be able to stand our own 2 feet, whatever the circumstances that occur in the future. And that the reason that we have encouraged more interaction with the United States is because it is necessary. And it is not just with the United States. It is with all our neighboring countries, and even countries as far afield as the Scandinavian countries, the EU. And so this is an ongoing process. And again, I will stress the point that we do this because we feel it is necessary.
And don't forget, just as tantamount to what you're asking.
That was U.S. President Donald Trump meeting with Philippine President Ferdinand Marcos in the Oval Office, reaffirming strong ties between Washington and Manila. Trump praised the Philippines for its military cooperation and hinted at a trade deal on the horizon. The two leaders also emphasized their shared commitment to fostering bilateral relations, with Marcos calling the United States the Philippines' closest ally. Meanwhile, Trump also weighed in on the Federal Reserve, sharply criticizing Chair Jerome Powell for keeping interest rates too high, suggesting they should be significantly lower, moves he believes would help ease pressure on the housing market. On China, Trump said a meeting with President Xi Jinping may happen in the near future, and added that he wouldn't mind if the Philippines engages more with Beijing. Swedish Prime Minister Ulf Kristersson has announced that Sweden will host trade negotiations between the United States and China early next week. U.S. Treasury Secretary Scott Bessent has confirmed he is scheduled to meet with his Chinese counterpart in Stockholm. Kristersson stated that it is a positive that both countries wish to meet in Sweden to seek mutual understanding. He also added that while the talks first concern the United States-China relationship, they also have significant importance for global trade and the economy. Discussions are expected to focus on extending a temporary tariff reduction agreement expiring August the 12th. On another note, U.S. Treasury Secretary Scott Bessent has stated that there is no need for Federal Reserve Chair Jerome Powell to immediately step down. He added that the Fed chief's legacy should be to right-size the central bank's non-monetary policy functions. Bessent's comments came a day after he called on the United States call for an exclusive review of the Federal Reserve's non-monetary policy operations. Bessent warned that the Federal Reserve's mission creep beyond its core mandate threatens its independence. He also suggested reviewing the Fed's decision to undergo a large building renovation despite operating losses. The New York Post has reported that the United States will leave the United Nations Culture and Education Agency, known as the UNESCO, for the second time under President Donald Trump's policy, as he continues to put and pull his country out of international institutions he has long criticized. For further analysis, we are joined from Tampa, Florida, by Executive Director of Global Foreign Policy Center, Justin Russell. Welcome to Q News Economic Bulletin, and always welcome to Q News, sir. Sir, let's start with the basics. How big of a financial blow is this for UNESCO, considering the U.S. covers about 8% of its budget?
Well, it's always good to see you, Reina. I don't think it's going to be as much of a financial blow to UNESCO as everybody might be thinking. I think even the Director General of UNESCO, when she was announcing the departure of the U.S., which, by the way, doesn't take place until December 31st, 2026. So we're still 18 months away from the U.S. departure from UNESCO under the charter. But, this is something that UNESCO has anticipated. It happened under Trump's original first term. It was brought back by Biden. We being the United States government have gone into and removed ourselves from UNESCO many times since its founding after World War II. Ronald Reagan did it, and then George W. Bush put us back in. Trump took us back out, put us back in. It has been going back and forth. I don't see this being a huge hit to UNESCO. Are they going to feel the financial ramifications? Of course. It's 8% of their total contribution. But I don't think this is going to make UNESCO go away. And I think that we may see other NATO partners, such as France. President Macron has said that this will not stand. It's a bad idea for the U.S. I think we'll see other member states contribute and kind of make up some of the difference.
Sir, UNESCO is already owed over $500 million in U.S. arrears. How prepared is it to handle this new hit? Which you said it's not a blow, sir.
I mean, there's always been arrears due to UNESCO and other UN agencies from the U.S. and the larger contributors. I mean, because of the fact that the U.S., China, Russia, UK, France, etc., contribute so much to UN organizations such as UNESCO, there's always going to be some amount in arrears. Again, this is not happening immediately. This is over the next 18 months. I have a feeling that UNESCO is going to demand some of those arrears that were in play before the announcement. They're going to expect some of that to be covered, and I believe that the U.S. government will uphold its obligation to that. That being the case, it's going to stop and start hard on December 31st, 2026. But I don't think this is going to be catastrophic for UNESCO. They'll feel the financial pinch, but don't be surprised if others contribute a little bit more just to make up the difference.
How does this repeated U.S. withdrawal affect Washington's influence over global culture and educational policy, sir?
Well, Raina, this is all part of the America First mantra. The reason that was given by State Department today was that it was due to diversity, equality, and inclusion programs. Their DEI, they're overtly DEI. They even called out UNESCO. They said everything short of UNESCO is anti-Semitic, and it's anti-Semitic because it allowed Palestine to become a member state of UNESCO. According to the U.S., there is no state of Palestine. So this is kind of a contrary, and this goes against the U.S., particularly the Trump administration, wants to focus on its own heritage, which by the global standards is, just 10 seconds in global history. We've only been around for 249 years. But when you talk about world culture and world heritage, we're in a global community, and the Trump administration refuses to understand that in order to promote our own heritage to the rest of the world, we have to accept and kind of recognize the heritage of the rest of the world here in the United States. And that is where this kind of gets sideways for the Trump administration. This is becoming isolationist. This is just another move by the Trump administration to continue to isolate it under the label of America First. And quite frankly, this is going to hurt America more than it's going to help.
Thank you very much for your fantastic analysis, sir, from Tampa, Florida. That was Executive Director of Global Foreign Policy Center, Justin Russell. Thank you very much for joining us on Qnews channel, sir. Now we move on to the latest developments from the commodities sector. Energy Minister Michael Shanks has reported that Britain's insolvent Lindsey oil refinery will close down after no buyers were found. He noted that the refinery will process crude only month-end, and the official receiver will sell refined fuels for a number of weeks to help customers adjust their supply chains. Shanks slammed the owners for leaving Prague's Lindsey oil refinery in an untenable position and urged them to do the decent thing by making a voluntary financial contribution to support workers. He added that all direct employees are guaranteed jobs over the coming months. Oil prices declined for a third consecutive session on Tuesday on concerns on brewing a trade war between major crude consumers. The United States and the European Union will curb fuel demand growth by reducing economic activity. Brent crude futures were down 0.8% to $68.68 a barrel. U.S. West Texas Intermediate crude was at $66.57 a barrel, down 0.9%. Gold climbed to a 5-week high, drawing strength from trade uncertainty and weaker U.S. bond yields as investors continue to eye U.S. President Donald Trump's August 1st tariff deadline. Spot gold rose 0.6% to $3,415.61 per ounce, hitting its highest since June the 16th. U.S. gold futures were up 0.6% at $3,428.10. That brings us to the end of our economic bulletin. Here's what we have been covering. IMF reports that global current account imbalances hit decade high in 2024. UK June borrowing totals 20.7 billion English pounds. and Sweden to host trade negotiations between the United States and China next week. This concludes our economic bulletin. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at QNewsEG to stay informed. Thank you very much for watching and stay tuned for more updates on Q News.